All right, guys, tomorrow's the big day, and I'll tell you what, the market made it through another tough one today. Lots of volatility, actually trading up pretty decently, I gotta say. It was holding its own pretty well as we look at SPY, QQQ. I'll also talk about what's interesting about IWM. I'll give an update on Bitcoin and wait and see how close we got to the resistance area. And I'll tell you what, those technicals are rock solid. And then there's something exciting about Tesla's chart that we have to look at as well. If you guys enjoy my analysis, you want to see more of it, see my buys and sells, see the other panel experts as well. There's a team of us over at the Discord. Links down in the description. Code word cash when you sign up. Sign up for that earners tier so you can see all the products and services we have to offer. I'll tell you more about that later in this video. For the meantime, let's get into the charts on this. So we're going to kick things off with SPY. Kind of go in order from the way that I announced it. So SPY, where did we go today? Trading up, closing about 0.28%, still down below the 5. So we got rejected off this 5-period EMA. Let me hide the lines on here, the Fibonacci extension, so I can show you about the middle of your screen where we ended up. So the 5-period EMA, really fast moving average, and being an exponential moving average, reacts pretty darn quickly to the nearest candles that you have. So very sensitive to such movements. We came up, touched the 5, got rejected, putting us in a pretty darn good position to be very nimble tomorrow in the market for whatever it is that we might happen to see. There's enough pressure that we might sell down near that 3 o'clock hour, which I believe is that time that has been put out there for when we hear about Trump's Liberation Day, when he starts to announce the reciprocal tariffs. So we want to be watchful for that. So this is SPY, tracking the S&P 500. And like I said, we're down below the 5 EMA. Now, mind you, if we leave that and get into instead the simple moving averages, the 20, we're still down below the 20. Watch for signs that we get up on top of that. Remember that I said that when we get to Tesla's chart, by the way, we're still down below the 200-day, which you can see we got that rejection before the previous sell. So we could potentially see a double bottom. It'd be nice if this low was higher than that low that's over there, but we'll still watch and see. Maybe we still watch it take place. The big signal would be getting a higher high in there and closing up above the 200-day. First, we got to get over the 20 in order to get there. We want to stave off any sort of death cross that we might get between the 50 and the 200, especially if we're going to stay bullish on the market. So maybe, I think there's a big possibility that a lot of pressure comes off once those reciprocal tariffs are announced. If instead it is something that the market's like, this is going to cause a huge trade war, we're going to experience lots of inflation from this, we can see that pretty much immediately in the market. You're going to see that downward pressure. But if you see instead a rapid rise, especially one that takes us up above the 200-day, giddy up, my friends, especially if we put in that new higher high. That's a nice sign for us that we could continue in that direction. So moving over to the Qs, looking at QQQ, we actually came into this area of resistance in here off these two candles that are interior to the low and the high that we saw. You can see where the wick of this candle, today's candle, came up to the bottom of those. Couldn't quite get higher, 0.81% up, not so bad. Huge range today in trading, and we had like a 2% swing or so from trough to peak on this thing. Anyway, moving on from there into IWM. For IWM, what we see when we look at this one is that we see big long wick on this, top to bottom, pretty much covering the 38.2 to the 23.6. This shows indecision, a fight between the bulls and the bears. Russell 2000 stocks are probably the most likely to be easily affected by what we see from the tariffs, being that they're smaller cap companies with not as much cash going around as such as we have in like the big tech companies. They're really well-established companies, as these are the small caps. So they have a whole lot more to gain or lose based on what we hear coming from that. I'm going to keep on reminding people every time I make one of these videos that I talk about the 4 pillars that prop up markets and that can really set up a rocket ship. We want high GDP. So come on, Atlanta Fed, come on and tell us some good news. We also want low inflation. We want easy monetary policy and a tight labor market. Today with the JOLTS report that came out, said that we had quite a few areas out there that actually had a little bit of contraction, fewer job openings than what there was before. But honestly, with a rather volatile measure like we have with the job openings and labor turnover survey, JOLTS, it's really nothing to be all that concerned about. If we go down below the 7.1 million job openings, now that's where we start to get into that territory where we're like, we're starting to dip below September when the SOM rule was thought to be triggered, where we thought maybe we were already in recession. Well, we got to watch for that. If we start to dip down below the 7 million mark, that's when we got to start being worried if we put in lower lows for the job openings. So that's something that we want to watch for. So moving over into Bitcoin, I said about getting close to the resistance area. I talked about that in my morning video. So let me zoom in. We're going to stretch that out and really hone in on today's candle. And when we do that, we came within $120 of that resistance, which on a percent basis is a really small percentage that we're away from that resistance so far, not being able to break over it. Now, if I zoom back out, you can see the trend line that we have to beat. This is the line that we have to get over. If I take down my technicals on this and we just look at the moving averages, man, that 50 pinching down on the 200, trying to show us that death cross moment. I hope that we don't see it. I would like to see the markets absolutely skyrocket from here. We closed up above the 20-day. That's a good thing. We're still down below the 200. That's a bearish thing. The 50 is about to cross the 200. That's a bearish thing. The RSI in bearish territory, but trying to cross to bullish. Tomorrow could be that day. And I got to say, this week could be that week, depending on what we see from the rest of the later reports. And if they're good, then the eyes really move to inflation reports, CPI and PPI. All the while, I don't want to undermine the idea that the reciprocal tariffs could do something pretty scary to us. So I do think that a lot of that fear is priced in early, that we might have that big potential before we find out what they are, and that downward pressure of uncertainty comes off the markets and we have further upside. I think that we could have a buy the news opportunity on our hands. I think the market sort of suspects that based on what we saw with the Qs and with SPY, and I think that we're seeing a little bit with Bitcoin here as well. Now, I will say TLT, before I get to Tesla, what's interesting about it, we have an inverse head and shoulders potentially for TLT. I said on the monthly chart that we have rising momentum. So this is one of those things that maybe the tariffs aren't so bad. Maybe inflation isn't going to be as bad. Inflation will cause TLT to sell down if we have high inflation, I should say. Low inflation is much better for long-term treasuries. So reciprocal tariffs might mess with the price action a little bit. We have returned to this trend line several times. We got darn close to it during the regular trading hours today. And if we do happen to break up above that, we have room up to about $101, almost to $102. So we want to keep our eyes on TLT because we could potentially confirm this head and shoulders pattern if we're able to get up above that trend line, which happens to be, if I take down the technicals, right up against pretty much, we got rejected at the 200-day before. We found support down at the 50, so that got retested, so far upheld. Now we got to get back to that 200 and test that as well. And that also connects with TMF, the triple leverage version of that, where you get about 3x the performance for that. And you can once again see that inverse head and shoulders look to it. We're up above the 50, up above the 20, but with a much bigger gap because of the cost that it takes to be in a play like TMF, especially for the long term. That expense ratio that you have bleeds away some of the value. And that's why you want to do your technicals more with TLT, where it's less of a derivative of the 20-year Treasury than what we get with TMF, which is like a 2 times removed derivative, or a second derivative, if you will, from what we have from those prices. So I'm going to keep that in mind when we look at TMF. Now, mind you, this could be that moment of outperformance. We want to watch that one. And if we do have that happen, let me actually put that up here for you on screen so you can see it. So let's go across these peaks that we have here. And then let's also, for a moment, we'll take a trend line on this. And let me turn off the magnet because that's going to mess with us if I don't. So we're going to go to the bottom of this thing and go up to the potential neckline that we have. Not a neckline unless it gets confirmed. That distance that you see there in front of you, we're going to transfer that to if it does, and we'll move out here to the apex of these converging lines, which we're sort of in a consolidation pattern too, which is this support line and that resistance line. If we do, that takes us up to about $58 per share on TMF, which I know there's a lot of people who watch this channel who would be very much okay with the idea of $58. So what are we looking for this? Well, for the stock market, we definitely want the stock market to go up from where we're at now. We also want the bond market to go up right now if we are fans of things like TMF and those long-term treasuries, that I do believe that with the rising momentum that we have on the monthly chart, there's a good potential that we do cross 50 into bullish territory as per the monthly RSI for TLT. And that also means most likely a lot of appreciation coming our way as well for TMF. So moving up, I think it was $58 per share for that one, and it closed today at $45, so that's $13. So that would be about a 30% upside from today's close. So that would be some fairly good upside that we could look forward to if indeed that happens. And if not, if instead the bond markets are having a rough time, oftentimes there's a lot of different things that could happen here, but oftentimes the bond market moves inverse to what we see happening in the stock market because of the risk balance that you have. That risk on, stocks outperform, risk off, bonds tend to outperform, but we also have to account for things like inflation and also the US debt burden and also GDP that's in there as well. So it's a bit of a nuanced answer. Maybe I should make a table and share it with you guys where we could actually see the different effects that we'd have, the different movements that we would have. Best case scenario, in my opinion, is that we see low inflation. That could help out the long-term treasuries, but then we also find ourselves in a risk-on environment where those tariffs aren't necessarily so bad. Maybe. And then GDP, hopefully we get some band-aids on that too, where it makes it easier to service debt, takes away less doubt of U.S. default, or I should say, takes away some of the risk for U.S. default, which certainly exists, but at this point in time, I still think that's pretty minimal. I think that we could kick the can down the road quite a bit farther before we really run into some serious economic turmoil. Now, just to check in with Tesla real quick, I wanted to piece this in here for you because I said there's something really interesting going on with Tesla's chart. This is the daily chart that we're looking at. The RSI is just below 50. That's not bad for us. That's bearish, but it's not bad. We're down below the 200 and the 50, so bearish, but we're up above the 20-day. That could be near-term bullish from where we're at right now. So not a lot in Tesla's favor at the moment, and I think maybe on Thursday we might hear about automotive tariffs, so we're going to have to watch out for that. It could be a negative catalyst for us, but we are up above the 20. We were able to close up above it yesterday. We had a full candle up above it today. Need to get that RSI up above 50. If we do, and we're able to get back up on top of that 200, look at the higher lows that we have. We need a higher high put in. Tesla could potentially have a bit of a recovery coming for us, and maybe it cancels this potential death cross that we have seeing. So I will say that Tesla could be at a very interesting point right now that it does a bit more of a recovery from where it's at. So I'm keeping my eyes on this. I'm going to keep watching about it. I'll report back to you guys. I'll see what I see about Tesla, and I'm definitely going to share it with you guys. So like I said, if you guys want to see more of my commentary, see my technicals, see my trades, there's a spot over in the Discord where I have my own expert channel over there and part of the expert panel over there, and you guys can come and join me and the other experts that are over there and the thousands of members that are part of that community. With that has the bread bot over there, which helps you out to see when stocks, cryptos, you name it, are going to move up or down, and then you can plan your trades accordingly from there. You have AI tools over there. You also have advanced charting over there. You have live trading pretty much daily, brought to you usually by Stock Mode, but some others do it too. I plan to do it as this summer comes around, so keep our fingers crossed on that one. That option opens up to me because I'd absolutely love to do it. And if you guys are interested in learning about technical analysis, learning how to trade using technical analyses with the bread recipe, which I trade with, you can find that with Stockmo Academy down in the description. I use options when I do it. There's an options course that's also part of Stockmo Academy, and you can get it cheaper when you sign up with code word DOCTOR for those courses. Code word CASH when you sign up for the Discord. Guys, come on over and join us. We'd love to have you over there. And now let me give you my concluding thoughts that I have. I think that, as I've mentioned before, I think there's a significant chance that we have that release of downward pressure once we just know what Donald Trump intends with his reciprocal tariffs. I think that's a possibility. We also have to entertain the possibility that what he says is received worse than expected and we see the market sell down as a result. If it does, it could be a sustained sell until we find out more about the other pillars that I said that prop up markets. We're going to have to watch for those. If they're worse than expected, that could do things to trigger higher inflation, which puts that crumbling into that pillar of low or subdued inflation that we're looking for to prop up markets. And then once again, those pillars, high GDP, watch Atlanta Fed GDP now, at least in the near term, until we get the Q1 advanced estimate for GDP. That's going to be really telling for us. It's going to be a big catalyst for the market. Those dates, the release dates are right on that website. And then also the CME Fed Watch tool. You can watch that for the chance that the Fed is actually going to do some cutting, and that can lead into maybe what the Fed could be planning for easy monetary policy. Right now, we're still in quantitative tightening, even if it's been significantly slowed, which is its own form of easing. It's just less tight than it was before, I guess. So the pickle jar, we haven't quite popped the lid on it yet to the point where the Fed is buying U.S. Treasuries. Instead, right now, they're still letting them roll off the balance sheet and not doing any repurchases. I think they're doing $5 billion per month, whereas before it's $25 billion per month. So seeing them switch over to easing, to quantitative easing would certainly help out. Lower federal funds rate means cheaper borrowing, which also helps out the companies that we have, helps out people trying to get money, allows the economy to be further stimulated, helps out GDP. Those pillars get real shiny real fast to prop up markets in a big way when you have that quantitative easing take place. And that's the whole reason why they do it in the first place. You can see what happened following the Great Recession when quantitative easing really took place and the Fed cut their rates near zero. And then you could also see it again with the pandemic and also the stimulus checks that came out during that time, just absolute free cash just being thrown around to companies, thrown around to individuals. And it was a real party for quite a while until the end of 2021 before we got the sell-off in 2022 when we had a bit of a hangover there. So I better wrap this thing up, guys. Thank you very much for watching. Join the earners tier. Use the code word CASH when you sign up for the Discord. And trust me, you're going to absolutely love the time that you have over there. And it's really going to help out your journey towards financial freedom. Same thing for those courses that are down in the description as well. Use code word doctor when you sign up for those. That's also going to give you a massive discount. And honestly, with the bread recipe at your back, it can cover the cost of the course in as little as one trade, and you can bundle them for even further savings on top of that. Thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.